will still continue with some spiral charts. So this is, I like to, I mean, this is again a bit the bigger picture, but, we compare Bitcoin to silver, gold, and real estate. We did that last time as well.
Yeah, let me just explain the chart to people who are listening. So where we have these circles, concentric circles. Are they concentric circles?
Yeah, I mean,
when you look at the spiral chart, what the big carrot's done, he's put circles in to explain essentially the market cap for silver, gold, and real estate, and how Bitcoin is chasing these down. And it's touched on the silver market cap a couple of times. Is that twice in the last year?
The last cycle we did in April and in November. I think in November we actually went above it like just slightly, but yeah, we surpassed silver's market cap just by a small margin, but then again we dropped back below it. But it seems if we continue the pattern, that indeed next cycle we will have to go above silver's market cap, and we're going to start going after gold, which will be cool.
Will be fascinating.
It will be fun. Also, because especially after the next halving, so in a year, Bitcoin's inflation rate will also be lower. It's now more or less the same as gold. But after next halving, which is already in a year, it will actually drop for the first time lower than gold. So it's going to be interesting.
Someone will have to check on Peter Schiff. That will be fascinating, though, because the gold bugs just will be in disbelief.
Yeah, I think, once Bitcoin really starts competing with gold, it's going to be very interesting.
10 trillion, that's a long way to go yet.
It's still, I still expect at least a full cycle. Maybe, I don't expect actually to trade above that the coming cycle. It's probably going to take another cycle after that.
Yeah.
Do we know what the price of Bitcoin would be for it to do that? Rough.
I have that mapped out. I have a chart where I have Bitcoin's price and gold's price if we would surpass it, but I'm not sure what the price is at now.
It's basically, is it 500,000?
Yeah, about that. If there's not quite 20 million coins.
Yeah, but 20 million-ish, 500,000. We could flirt with it. Interesting. It depends what gold does as well, though.
Yeah, and gold has been going up recently, obviously, because of recessionary fears. And so this, here, so I compare Bitcoin. It's a bit similar, but I compare them to the biggest currencies in the world. So we have the British pound there, the Japanese yen, the euro, the USD, and the Chinese yen.
The pound is fucked. It's coming for it.
We're now more or less trading similar to, for example, the Mexican peso or so. So already kind of. So and these are the biggest currencies in the world, by the way. Yeah? So Bitcoin already surpassed many, in market terms of market cap, but we're already trading at a similar currency, for example, the Mexican peso now, and we're going after the pound next. So that looks good.
I don't have to feel too patriotic about that one. Interesting, fascinating.
Yeah. So here I plotted the Bitcoin halvings. They're scaled, to the current cycle. So you can see how far, how much of a price increase, for example, the 2013 cycle had. It would have gone more or less to 1 million almost if we would have the similar returns in this cycle, which is obviously not reasonable to think because the market cap has increased significantly. But I added here also the realized price. Those are those other lines that you can see there, and we can see that those bottoms they fell more or less at the similar moment in time below realized price. So realized price is again the average purchase price of all Bitcoin, so price only trades about maximum a year below realized price each cycle, and it seems that we're past that point now, and we made a low. So
the pattern here is every cycle, the percent growth we see is reducing.
Yeah. So those are diminishing returns, as they call them.
Yeah. So does it eventually get to the point where there's no returns to be made, and we go backwards?
Yeah, so I have some evidence why I think that's not going to happen, and actually I think that potentially the next cycle might have a higher increase than current cycle, and I'll show the reasons for that. But it has to do with illiquid supply, indeed, Bitcoin getting more scarce, and so we'll get to that in the next charts. But yeah, if you think and the lock growth curve again is one of those famous models, right, in Bitcoin. Then you would expect diminishing returns each cycle, but if we look at the patterns on chain, what's actually happening, Bitcoin is getting more scarce. And I think when hype is coming back next cycle, I think it might cause higher price increases than that we had last cycle.
Interesting. Okay.
Yeah, this is still the same comparison, but now they're not scaled. They're just really on a normal price scale. So we can see again that year. I also mentioned this chart I showed in the last interview, where we have this period of a year where it's actually really a good accumulation zone. I think we mentioned that last interview. Like this is an ideal time to be accumulating Bitcoin. And we're kind of now past that red zone, so I think our last interview was 8 months ago or so.
Yeah.
So that year more or less has passed now. It's still reasonable to buy Bitcoin or to average in, if especially if you think that next cycle we will reach prices higher than 100K. But yeah, the ideal accumulation zone was in that red zone, and where we made the bottom, obviously. So if we look at the amount of supply that is in circulation that is held by short-term holders, I think it's again shows where the short-term holder is such a powerful metric. We can use this kind of as a proxy for demand, or how much hype is there in the market currently. Because there's high amounts of young coins. That means a lot of new people are coming in the market, and that's why these peaks here that you can see with they correlate with all the blue dots, in the price chart. With all-time highs are made during those peaks. And yeah, as you can see, we're nearly at a low, we're very low. So there's really not much of hype in the market currently. There's not many young coins in the market, which is also reason to believe that we cannot expect high price increases. I think we're still gonna have some horizontal price movement, let's say. I expect that kind of to be the case until the next halving, but yeah, it's kind of waiting for one of those peaks again in young supply where new hype is coming in the market, and it seems to happen more or less every 4 years, right?
It's interesting that the previous all-time high basically had no hype. The second time we hit 68K or whatever it was, 69K. Yeah. The second top in but that was actually a top made only on long-term holders being really excited about Bitcoin and expecting that price would still continue to go above 100K. That's why. But if you looked at this indicator, you already knew that was not very sustainable. And so that's why we barely made a new all-time high there. By the way, we almost didn't. So it's the April top was actually the true peak of the cycle, also in terms of hype. And if hype is gone, it's not going to come back, soon. It takes a couple of years. Again, it needs to build up. There need to be some catalyst. But yeah, it will come again next year. I don't see any reason why not.
If you had a platform with live charts for this, I would subscribe. I would pay to access that.
Yeah, you're a lucky man.
Is that on the roadmap?
You're a lucky man. You can go to bitcoinstrategyplatform.com and subscribe. You will
get access
to.
It's already there.
It's already there. Yeah.
That sounded like such a setup, didn't it? It sounded like such a setup. Danny, can you bookmark that?
Yeah.
All right.
Yeah. So here, we'll discuss a bit of the bearish case. So here I compared Bitcoin to the S&P 500, and we use TA because obviously we don't have access to on-chain analysis in traditional finance. So we can only compare the two through TA. And so we use the relative strength index.
which is on a scale from 0 to 100, like what is Bitcoin's momentum basically, and or the S&P in this case. The blue line is the S&P, and so I zoomed out a little further, but you can see that the orange line, like so we had the recession in 2008. We had the relative strength index touched like values below 20 there, and Bitcoin, it came forward out of that crisis more or less. So it was launched, and but you can see that this Bitcoin's RSI kind of follows the same pattern. In the beginning, a little less still, but it starts to correlate more and more, with the S&P. So we can see the similar cycles there actually.
Why do you think that is? Why do you think we have that correlation?
I mean, as the S&P as well is a bit of a risk asset, so Bitcoin is correlated to risk assets currently more than it was in the past. But it seems to be the natural human psychology, so these market cycles, they obviously don't only happen they happen in all markets, and risk appetite or that happens in all markets, and so that's why this correlation is there. But this again shows why also we cannot say that the halvings, which actually those are the horizontal lines that you can see there, those are actually the halvings in time. So we made a bottom, and then the halving comes, and we do see that after the halving, that Bitcoin's price outpaces kind of like the S&P. So there was, especially in the first cycle, for example, if you look at the first halving, Bitcoin's RSI spiked way higher than the S&P did. So, but it has been like more similar. I think that's why we can also, if you look at other macro, if you look at other indicators in macro, Bitcoin also will follow the similar cycle pattern. So that's why also I do believe the halving is a bit of a narrative. It still causes obviously the hype around it currently probably more than the actual halving, but it still causes it still serves as a catalyst. This is kind of worrying in a way, because if Bitcoin's price stays correlated and we do get a recession, later this year or early next year, and we get to an RSI in the S&P of below 20 again, like we did in the dot-com bubble or in the Great Recession, Bitcoin's price could temporarily, we could deviate a bit from the 4-year cycle, in that sense.
So we kind of need the bull market before then.
Yeah, well, I think it will kind of go hand in hand. If we have if there's going to be a recession, I don't expect an immediate. I think it will just be we will have to. A recession takes about a year, 2 years, So we'll just have a bit of a delay, before we get to the bull market. So it depends on what's going to happen on a macro level with Bitcoin. If we do get a recession, we can have a bit of a delay in the next bull market, which would also deviate the cycle pattern. So this is a very, I think, an important chart to keep track of, because if we start going, if we get an RSI below 40 again, in the next months or so, that's a severe warning signal that we could potentially or Bitcoin needs to decorrelate, which also can happen. If Bitcoin becomes more, if we get the digital gold narrative, it will be interesting to watch. I don't know if that will happen. For now, it's quite correlated to the S&P, but we could, decorrelate, and it's possible. And definitely, if we look at some of the charts later that I'll still show about illiquid supply, so how Bitcoin is getting more scarce, there is a possibility that we actually might decorrelate.